Based on verifiable reports from leading financial and crypto institutions, several key trends are emerging for Bitcoin and the broader cryptocurrency market in 2026. This is not financial advice, but a synthesis of current predictions and analysis. Bitcoin market structure and price outlook. Price action and targets. After a volatile end to 2025, Bitcoin started 2026 trading around $93,500, showing signs of a potential bullish trend. Analysts note key resistance levels at $94,000 and $98,000. A sustained break above $98,197 is seen as critical for a more meaningful move higher. Breaking the four-year cycle. Major asset managers like Grayscale and Bitwise predict the end of Bitcoin's historical four-year boom and bust cycle. Grayscale expects Bitcoin to reach a new all-time high in the first half of 2026, driven by institutional demand rather than retail speculation.
Institutional absorption of supply. A dominant theme is overwhelming institutional demand. Bitwise predicts that ETFs will purchase more than 100% of the new supply of Bitcoin in 2026. This is supported by a structural shift where long-only ETFs, corporate treasuries, and sovereign holdings are locking up a significant portion of the available supply. Major driving forces for 2026. Institutional adoption is accelerating beyond simple investment products. Major financial institutions are actively building crypto services. JP Morgan is preparing to accept Bitcoin and Ether as collateral for institutional clients. Major banks like Morgan Stanley, PNC, and Citi are developing crypto trading, settlement, and custody products. Fidelity anticipates more countries will add Bitcoin to their national reserves, following recent legislative moves in nations like Brazil and Kyrgyzstan. Regulatory clarity in the United States is expected to be a significant catalyst. The industry widely expects the passage of comprehensive crypto market structure legislation, often referred to as the Clarity Act, in 2026. This would solidify rules for banks and traditional financial firms to hold and intermediate digital assets, further paving the way for institutional integration. Broader crypto ecosystem predictions. The focus in 2026 is expected to shift from narrative to tangible utility and integration with traditional finance, or TradFi. Stablecoins as a financial rail. With the Genius Act providing federal standards, stablecoins are predicted to become a foundational payment layer. Galaxy Digital forecasts that stablecoin transaction volume will overtake the traditional ACH banking network. BlackRock notes stablecoins are becoming a bridge between TradFi and digital liquidity. Tokenization of real-world assets, RWA. This is expected to move from pilot programs to mainstream. Predictions include a major bank accepting tokenized equities as collateral, and corporate blockchains settling over $1 billion in real economic activity.
Convergence with artificial intelligence. A major trend is the intersection of AI and crypto. Coinbase and Andreessen Horowitz, A16Z, predict that AI agents will use blockchain networks for instant, permissionless payments and settlements, effectively allowing the internet to become a financial system. Key institutions and their 2026 forecasts. To summarize the stance of major firms, Grayscale, Bitcoin reaches new all-time highs, ending the four-year cycle. Bitwise, Bitcoin less volatile than Nvidia, ETFs buy 100% of new Bitcoin supply. Galaxy Digital, stablecoins overtake ACH volume, long-term $250,000 Bitcoin target by end of 2027. Fidelity, more countries will buy Bitcoin for national reserves. JP Morgan, digital assets gain favor as alternatives to the dollar. BlackRock, stablecoins challenge governments' control over domestic currencies.
Based on verifiable predictions from top asset managers and policy analysts, both ETF flows and regulatory developments are expected to be powerful, interconnected forces shaping Bitcoin's market in 2026. Here is a breakdown of the predicted impact for each area. ETF flows, the institutional demand engine. Spot Bitcoin ETFs have transformed from a novel product into a critical source of structural demand. Analysts expect this to intensify in 2026, acting as a major price support mechanism. Key predictions: supply absorption. Bitwise forecasts that ETF purchases could absorb more than 100% of the new Bitcoin supply mined in 2026, creating a fundamental supply squeeze.
Capital inflows. After $23 billion in net inflows in 2025, Bloomberg Intelligence projects 2026 inflows could range from a conservative $15 billion to as high as $40 billion under favorable conditions. Broader portfolio integration. Grayscale notes that less than 0.5% of U.S. advised wealth is allocated to crypto. As more wealth management platforms complete due diligence and add crypto to model portfolios, a wave of slower-moving institutional capital is expected to arrive throughout 2026. Regulatory developments, the framework for growth. The passage of clear, comprehensive crypto legislation in the United States is widely seen as the single biggest potential catalyst for unlocking the next wave of institutional adoption. Key prediction. Grayscale explicitly expects bipartisan crypto market structure legislation to become U.S. law in 2026. This who regulates what framework would cement crypto within the traditional financial system.
Potential market impacts. Bank integration. Clear rules would allow major banks to expand crypto services, like accepting Bitcoin as collateral and offering custody with confidence, funneling more institutional capital into the market. End of the 4-year cycle. Grayscale argues that this institutionalization, driven by ETFs and regulation, will break Bitcoin's historical boom-bust cycle. They predict a steadier advance in prices and a new all-time high in the first half of 2026. Stablecoin expansion. Following the 2025 Genius Act, 2026 will see major banks and corporations actively launch and use compliant stablecoins. Galaxy Digital predicts stablecoin transaction volume could overtake the traditional ACH banking network, building crucial financial rails for the digital asset economy.
How these forces interact. These trends do not operate in isolation. Regulatory clarity reduces risk for institutions, which then allocate capital through regulated ETFs. This ETF demand directly impacts Bitcoin's price by competing for limited supply. This virtuous cycle is what analysts believe will drive the market in 2026. To summarize the stance of major institutions, Grayscale expects market structure law in 2026, ending the 4-year cycle. Bitwise predicts ETFs will buy 100% of new Bitcoin supply. Bloomberg Intelligence projects ETF inflows of $15 to $40 billion. Galaxy Digital sees stablecoins overtaking ACH volume. Would you like a deeper look into how these institutional flows are tracked, like through on-chain data or ETF flow reports? Or more details on the specific regulatory bills being debated?